SpaceX is about to do something that sounds impossible. A rocket company, founded to make humanity multiplanetary, is preparing to enter the stock market at a valuation that could reach $1.75 trillion. Not billion, trillion. That would make SpaceX more valuable than many of the largest public companies on Earth before its first public trade even begins. And the strangest part is this: investors are not just being asked to buy rockets, they are being asked to buy Mars. They are being asked to buy satellite internet. They are being asked to buy artificial intelligence in orbit. They are being asked to believe that the most important infrastructure of the next century will not be built on Earth, but above it. This is not just an IPO. This is a test of how much money Wall Street is willing to place on a dream. And it may become the clearest example yet of how the modern greed machine works. Because when a company becomes this large, this hyped, and this connected to one man's vision, the question is no longer simple. The question is not, is SpaceX impressive? Of course it is. The real question is, who gets rich? Who takes the risk? And what exactly are public investors being invited to buy? For most of its life, SpaceX was the private market trophy that ordinary investors could not touch. It was the company that broke the old aerospace model. Before SpaceX, launching things into orbit was slow, expensive, bureaucratic, and dominated by government contractors. Rockets were treated almost like disposable luxury machines. You used them once, burned through billions, and started again. SpaceX changed that story. Reusable rockets made launches cheaper. Falcon 9 became the workhorse of the modern space economy. NASA became a customer. The Pentagon became a customer. Commercial satellite companies became customers. And then SpaceX did something even more important. It stopped being only a launch provider. It built Starlink. Starlink turned SpaceX from a company that sends other people's machines into space into a company that owns the network itself. That changed everything. A rocket launch business can be powerful, but it is still limited by the number of launches, contracts, margins, and payloads. Starlink is different. Starlink is recurring revenue. Starlink is subscription money. Starlink is infrastructure. Starlink is a global internet system that does not need fiber cables, cell towers, or friendly geography. In remote villages, war zones, ships, airplanes, disaster areas, and rural homes, Starlink can become the connection layer. That is why investors do not look at SpaceX as just another aerospace company. They look at it as a strange hybrid, part Boeing, part Comcast, part defense contractor, part telecom giant, part AI infrastructure play, part religion. And now the doors may open to the public market. According to reports, SpaceX is aiming to raise around $75 billion in what could become the largest IPO in history. The company is reportedly targeting a valuation around $1.75 trillion and a price of $135 per share. To understand how extreme that is, compare it to history. Saudi Aramco's IPO was enormous. Visa's IPO was enormous. Alibaba's IPO was enormous. SpaceX could dwarf them. But this is where the story becomes uncomfortable. Because SpaceX is not going public as a simple, clean, profitable machine. It is going public as a company with breathtaking ambition, breathtaking revenue growth, and breathtaking costs. In 2025, SpaceX reportedly generated $18.67 billion in revenue. That is massive. But it also posted a net loss of roughly $4.9 billion. And that creates the central tension of the IPO. The company is real. The rockets are real. Starlink is real. The revenue is real. But the valuation is not based only on what exists today. It is based on what investors believe SpaceX might become tomorrow. That is where the greed machine starts to move. When a company is private, its story is controlled by insiders. Venture funds, early employees, founders, and private investors get access first. They buy early, when the risk is high but the price is lower. They wait while the company grows, while the legend builds, while ordinary investors watch from outside. Then, when the story is big enough, the company comes to the public market, and the public finally gets access. But often, the public gets access at the most expensive moment. That does not automatically mean the stock is bad. Some great companies went public and kept growing for decades. But it does mean the game changes. Early investors bought uncertainty. Public investors may be buying mythology. SpaceX's mythology is more powerful than almost any company alive. Mars, reusable rockets, global internet, national security, AI data centers in space, humanity's future among the stars. It is not just a business pitch, it is a civilization pitch. And civilization pitches are dangerous because they make valuation feel small. If SpaceX really builds the infrastructure of the space economy, then maybe even a $1 trillion valuation will look cheap one day. But if some of the future markets do not appear, or appear much later than expected, then public investors could discover that they paid today's money for tomorrow's science fiction. This is the heart of the SpaceX IPO. It is a battle between two realities. Reality 1. SpaceX is one of the most important private companies ever built. Reality 2. Even the greatest company can become a bad investment at the wrong price. And this price is not modest. At a $1.75 trillion valuation, SpaceX would be trading at a price-to-sales multiple that belongs more to speculative software or AI companies than to traditional industrial businesses. But SpaceX is not traditional. That is the argument. Supporters will say you cannot value SpaceX like an airline, a defense contractor, or a telecom provider. It is creating new markets. It owns launch capacity. It owns satellite distribution. It owns engineering talent. It has government relationships. It has a brand no other space company can match. And with Starship, it may push the cost of access to orbit down again. Critics will say that is exactly the problem. Every bubble begins with the phrase, "This company cannot be valued like normal companies." Both sides have a point. SpaceX is not normal. But the stock market has a brutal habit of turning extraordinary stories into ordinary math. Revenue, margins, dilution, debt, cash burn, capex, regulatory risk, competition, governance. No matter how beautiful the rocket looks on launch day, the spreadsheet still waits on the other side, and the spreadsheet has questions. How profitable can Starlink become when it must constantly launch, maintain, and upgrade a satellite constellation? How much capital will Starship consume before it becomes fully operational at scale? How much of SpaceX's revenue depends on government contracts? How much political risk comes from being tied closely to defense, communications, and Elon Musk himself? How much will investors tolerate if the company continues to lose billions while funding Mars, AI, and orbital infrastructure? And perhaps the biggest question of all, how much control will public shareholders actually have? This is not a small issue. The IPO structure is expected to preserve strong founder control. That means public investors may get economic exposure, but limited influence. In plain English, you can buy the ride, but you may not get to steer. For some investors, that is acceptable. They want Elon Musk in control. They believe SpaceX exists because it was not run like a normal company. They believe the same concentration of power that makes governance experts nervous is also what makes SpaceX capable of doing things no committee would approve. But for others, this is a warning sign, because when one person controls the vision, the board, the strategy, and the public narrative, investors are not just buying a company, they are buying dependence. Dependence on one man's judgment, one man's priorities, one man's reputation. And Elon Musk's empire is no longer simple. Tesla, X, XAI, Neuralink, The Boring Company, SpaceX. The lines between these companies can become strategically interesting, but also messy. Related party transactions, shared ambitions, overlapping technologies, and personal influence all create questions that public investors will need to understand. This is where the SpaceX IPO becomes bigger than space. It becomes a story about modern capitalism. In the old model, a company went public to raise money, expand operations, and give investors a piece of a growing business. In the new model, the IPO can also become a liquidity event, a branding event, a cultural event, and a mass participation spectacle. The company arrives with a story already built. The founder has a massive audience. Retail investors are emotionally involved before the first trade. The banks package the deal. The media amplifies the drama. The early investors mark up their holdings. Index funds prepare for possible inclusion. And millions of ordinary people ask the same question. Is this my chance to finally own SpaceX? That question is powerful. It is also dangerous, because finally is an emotional word, not an investment thesis. People do not want to miss the next Tesla. They do not want to miss the company that takes humanity to Mars. They do not want to watch another once-in-a-generation business rise while they stay on the sidelines. Fear of missing out may become one of the largest sources of demand for the SpaceX IPO. And Wall Street knows this. That is the machine. The dream is real. The technology is real. The ambition is real. But so is the monetization of public excitement. The SpaceX IPO may be sold as a chance to participate in the future, but it is also a chance for the financial system to transform a private market legend into a public market product. Once that happens, SpaceX will no longer be judged only by launch videos and mission statements. It will be judged every quarter. Analysts will ask about margins. Investors will ask about losses. Short sellers will look for weak points. Regulators will review disclosures. Competitors will attack profitable segments. And the stock price will become a daily referendum on one of the most ambitious companies in history. That could create a strange conflict. SpaceX was built with a long-term mission: make life multiplanetary. The public market is built around short-term pricing. Those two forces do not naturally fit together. Mars does not care about quarterly earnings, but Nasdaq does. This tension may define SpaceX as a public company. If Starship succeeds, if Starlink keeps expanding, if orbital infrastructure becomes real, and if SpaceX turns its huge ambitions into durable profits, then the IPO may be remembered as the moment ordinary investors finally got access to the most important company of the space age. But if the valuation runs too far ahead of reality, the IPO could become something else. A monument to market excess. A moment when investors were so desperate to buy the future that they ignored the price of the present. This is why the SpaceX IPO is not simply a bullish or bearish story. It is a power story. It shows how the future gets financed. It shows who gets early access and who comes in later. It shows how technology, government, retail investors, Wall Street, and celebrity founders now merge into one machine. And it shows that the most valuable product in modern markets may not be software, rockets, or satellites. It may be belief. Belief that Mars is possible. Belief that one company can dominate space. Belief that AI infrastructure could move into orbit. Belief that a private empire can become a public stock and still keep its soul. Belief that paying almost any price is justified if the story is big enough. But belief is not free. In markets, belief always has a price, and with SpaceX, that price may be $1.75 trillion. So when the IPO arrives, the question will not be whether SpaceX changed the world. It already has. The question is whether public investors are buying the next chapter of that change, or paying a premium to fund someone else's dream. Because the rocket may be headed for Mars, but the stock will still have to survive Earth.